ultimate guide for beginners on using robo-advisors for specific financial goals, including retirement and college savings, in 2024. Step 1. Determine your financial goals. Identify your specific financial goals, such as retirement savings, college savings, emergency fund, other long-term goals. Determine how much you need to save for each goal. Step 2. Assess your financial situation. Gather your financial documents, including income statements, expense statements, credit reports, bank statements. Calculate your net worth by subtracting your liabilities from your assets. Step 3. Choose a robo-advisor research and compare different robo-advisors, considering factors such as fees and expenses, investment minimums, investment options, e.g., ETFs, index funds, mutual funds, user interface and mobile app, customer service and support. Consider the following robo-advisors for specific goals: retirement, Betterment, Wealthfront, Schwab Intelligent Portfolios; college savings, Fidelity Go, Vanguard Personal Advisor Services, TA Direct. Step 4. Open an account. Sign up for a robo-advisor account, providing required personal and financial information. Fund your account with an initial deposit, which can be as low as $100 or $1,000 depending on the robo-advisor. Step 5. Set your investment strategy. Choose from pre-built investment portfolios or customize your own based on your risk tolerance and investment goals. Consider the following investment options: conservative, 60% bonds, 40% stocks; moderate, 40% bonds, 60% stocks; aggressive, 20% bonds, 80% stocks. Step 6. Set your contribution schedule. Decide on a regular contribution schedule to make saving easier and more automatic. Consider setting up automatic transfers from your bank account or paycheck. Step 7. Monitor and adjust your portfolio. Log into your robo-advisor account regularly to monitor your portfolio's performance. Rebalance your portfolio as needed to maintain your target asset allocation. Step 8. Take advantage of tax-advantaged accounts. Contribute to tax-advantaged accounts such as IRAs, individual retirement accounts, Roth IRAs, 529 college savings plans, Coverdell education savings accounts, ESAs. Step 9. Automate your savings. Set up automatic transfers from your bank account or paycheck to your robo-advisor account. Take advantage of employer-matched contributions to your retirement accounts. Step 10. Educate yourself. Continuously learn about investing and personal finance to make informed decisions about your money. Read books, articles, and online resources to stay up to date on market trends and strategies. Step 11. Diversify your portfolio. Spread your investments across different asset classes, sectors, and geographic regions to minimize risk. Consider investing in international stocks, real estate, and commodities. Step 12. Stay disciplined and patient. Resist the urge to panic during market downturns or make emotional decisions based on short-term market fluctuations. Stay focused on your long-term goals and maintain a consistent investment strategy. Step 13. Review and rebalance regularly. Regularly review your portfolio's performance and rebalance it as needed to maintain your target asset allocation. Adjust your investment strategy based on changes in your financial situation or investment goals. By following these steps, you can effectively use a robo-advisor to achieve your specific financial goals, including retirement savings and college savings. Remember to stay disciplined, patient, and informed to maximize your returns over time.